Welcome everyone. In this session, we are going to learn about a candlestick pattern called Bullish Engulfing. What is Bullish Engulfing pattern? Whenever a small red candle is formed at the end of downtrend and that small red candle gets engulfed by a big green candle, then it is called a bullish engulfing pattern. As you can see here in the drawing, as you can see, it was a downtrend. Then at the bottom a small red candle is formed, and just after that red candle a big green candle formed which completely engulfed the previous red candle. This is known as bullish engulfing pattern. What is the significance of this pattern? This pattern basically signifies that the downtrend is now over and the bulls took the charge, and now the market might move upside. So the psychology behind this pattern is that the market was continuously falling, and at the end a small red candle formed, which means that bears became little bit weak, and as soon as the bear became weak, just after that a big green candle formed which engulfed the previous bearish red candle, and this big green candle which engulfed the previous bearish candle represents that now bulls are getting powerful, and thus as the bulls are taking charge, the market has a potential to move upside. This is what the psychology behind the bullish engulfing pattern is. Now let's see some examples and how we have to trade bullish engulfing pattern. We will be looking into it. So let's move to our next slide. See, here is a 15 minutes chart of Interglobe Aviation Limited, also known as Indigo Airlines. As you can see, a very big red candle formed in the starting, and then market started falling, and at the end a small red candle is formed, and this red candle is completely engulfed by the immediate next green candle. So this pattern combinedly is known as bullish engulfing pattern, which means while falling downwards the bears became weak, and just after that bulls took the charge, and these bulls overpowered the bears, and now the stock has potential to move upside. So how we trade this type of pattern? What we do is, there are three criteria for trading this pattern similar to the hammer pattern. First criteria, previous downtrend. Second criteria, short candle, short bearish candle at the end, and the third, green engulfing candle. So all these criteria are being met here. Let's see. Here we have previous downtrend, short red candle, and a green engulfing candle. So what we have to do is, we just have to enter at the closing or at the high, whatever we feel comfortable. We can enter at any point, either closing price or at the high also. So suppose we enter at the close, our stop loss would be somewhere little bit low of the low of candle by giving some buffer of 1 to 2 points. Here would be our stop loss. So if this much is our risk, just 1.5 times of this will be our reward. So this is our target. and as you can see, our target got achieved in this candle. This is how we have to take. Always remember, risk reward ratio should be minimum 1 is to 1.5. Never trade with the risk reward of less than 1 is to 1.5. Always trade with a risk reward of minimum 1 is to 1.5. So this is how we trade bullish engulfing pattern. Let's see some more examples. Here we have Euro USD 15 minutes time frame. As you can see, there was a long downtrend, and at the end a short body red candle is being formed, which is anchored by a big green candle. So this is our bullish engulfing pattern. What we have to do is we have to enter at the close of the candle, keeping a stop loss somewhere here, giving some buffer. If this much is our risk, then this would have been our target. So we would have achieved our target in this candle somewhere here. This is how we have to trade bullish engulfing pattern. Sometimes most of my students ask me that, sir, we have seen in YouTube that if suppose this is a red candle, this is a red candle, and this is a green candle. Sometimes my students ask me, sir, that we have seen in YouTube that some YouTubers are teaching that if the body of the red candle is smaller than the body of green candle, then also we can consider bullish engulfing. Then I used to reply to them that though people may be using this type of concept, but as we can see that candlestick pattern sometimes fails, and most probably if you are trading like this, then definitely it's going to fail. You cannot amend the rule which has been given, and the rule says when the previous bearish candle is completely engulfed by the immediate green candle, then it is called a bullish engulfing. So it doesn't matter whether the candle, red candle is small or green candle is big, but the wick are small. It doesn't matter on those things. The things which matters is the green candle should engulf the previous red candle completely. Then only it is a bullish engulfing pattern. So this is how we have to trade. Let's see some more examples. Here we have chart of Axis Bank 15 minutes time frame. As we can see, a clear downtrend, a short body red candle at the bottom, which is being engulfed by the green candle. So what we have to do as per our strategy, we have to enter here, keeping our stop loss somewhere here by giving some buffer. If this much is our risk, then this would be our target, and as you can see, we will achieve our target somewhere here. Always maintain a risk reward of 1 is to 1.5. Never trade with a risk reward of less than this. So this is how we trade candlestick patterns in market. Here is the example of Indian Oil Corporation Limited. As you can see, there was an uptrend, downtrend, then an uptrend, and finally a downtrend. So downtrend has been confirmed. A small red candle which is being completely engulfed by the green candle. So what our strategy says? Our strategy says we have to enter here, keeping our stop loss somewhere here. If this is our risk, our reward would be somewhat this, which would have been achieved in this candle. So this is how we have to trade candlestick pattern. This is how we trade bullish engulfing pattern, by keeping a risk reward of minimum 1:1.5. So I hope you might have understood when about the bullish engulfing pattern. Here we have an example of Jindal Steel and Power Limited 15 minutes time frame. As you can see, a clear downtrend and a short red body candle at the bottom, followed by immediate engulfing green candle. So what our strategy says? Our strategy says we have to enter at the closing or at the high of the candle, keeping our stop loss somewhere here by giving a small buffer. So if this much is our risk, this would have been our target. This would have been our target. Somewhere here you would have achieved. If this would have been our risk, if this is the risk, then this is the target. 1:1.5. 1:1.5. This is how we have to trade bullish engulfing pattern. So this was all about the bullish engulfing pattern, how we have to trade bullish engulfing pattern, what is the psychology behind the bullish engulfing pattern, and how we have to plan our trades accordingly. I hope you might have understood very well about the bullish engulfing pattern. So we will see you soon in the next session with the another pattern which we use for intraday trading. Till then, all the best for your trading career and see you soon in the next session.